Good afternoon and welcome to today's training and conversation on rideshare taxes. I am Jenny, the outreach specialist with the Get It Back campaign at the Center on Budget and Policy Priorities. Today is a part of our virtual training series that features the expertise of campaign partners in the field. Today is Francesca Jean-Baptiste. We focus usually on specific outreach strategies and skills. Today we are focusing on rideshare taxes. And for those who don't know, we are the Get It Back campaign. We are a national effort to connect eligible workers to tax benefits. We promote tax credits like the Earned Income Tax Credit, Child Tax Credit, free tax filing, and other benefits. We work with a network of diverse partners. Thanks, y'all, for being in our network. And we provide outreach tools, trainings, and resources to help you connect eligible workers to the tax credits and free tax help. And all of these resources and everything we talk about today are available on our website, eipcoutreach.org. So today, we are so excited to be talking about Roadmap to Rideshare Taxes. Roadmap to Rideshare Taxes is a comprehensive tax resource for Uber, Lyft, and other rideshare drivers. We've put together resources, in addition to the resources for the drivers, we have resources and training for VITA staff and volunteers. I will go through the resources shortly, so fear not. But basically, this project came about because we were hearing from a lot of VITA folks that there were increased numbers of gig workers coming in as clients, especially Uber and Lyft drivers. Folks were coming in very unprepared to file, hadn't done the tracking that they needed to do, and volunteers at sites also had a lot of questions. Meanwhile, over at the Cash Campaign of Maryland, the lovely Francesca Jean-Baptiste had been working with small business owners for many years. She had created her amazing Schedule C Step Up, which is a program for small businesses, and teaching this. And so we, after seeing her present at the Common Sense Conference, we decided to partner and create a national digital resource very much based on the information from Francesca's program. So the purpose of this project is twofold. We wanted to create an accessible resource that rideshare drivers could access online for tax information, and we also wanted to create resources that you all in VITA programs could use. And so today, for the first part of the hour that we have together, I will go over the resources that we've created and how you all can use them with your clients and your volunteers. We've combed through all the questions that you all responded to, and found that folks really wanted a bit of a refresher on business expenses. So after I cover the resources, Francesca will go through that topic. And then after that, we will go through any questions you all have. So get ready and just, feel free to type them throughout the session. We have put together a page for tax preparers, and it really has all of the links that I'm talking about, right? So we have the website links, the calculator, materials, outreach, and everything. So before you, everything is on here, so don't worry about that. So for those who are just starting out with this topic, if you are new to this topic or if you need a refresher, last year Francesca did an incredibly comprehensive training on rideshare taxes on this page, Rideshare Taxes, What Your Tax Volunteers Need to Know. Really take a look at this training before you get started. It covers everything. This webpage also has all of the presentation slides and the notes for you all. This can be useful guidance for you all as you structure your VITA trainings, and you can also use the slides that Francesca put together. So definitely start here. A lot of the questions that folks asked in the registration are also answered in this training. Okay, so the main resource that we have put together is our website, ridesharetaxhelp.com. And for those folks who are starting, the page, How Do Rideshare Drivers Pay Taxes, covers every single topic that rideshare drivers need to know. So if you just scroll down, it covers, you'll see what it means to be self-employed, understanding that, how to count income, how to track business expenses, how to pay quarterly estimated payments, and other resources that are available. So I would say if you have any clients that you need to send out for more information, send them to this website. We also have a page here that is on counting income. So I know a lot of folks have trouble, they don't know where to find this information from Uber and Lyft, and so we've put together a page that covers exactly how folks can find their income documents. And it also covers, so some folks won't get a 1099-K from Uber or Lyft, and so for those folks, we also have instructions for how to log into the partner dashboard. All right. So this is probably one of the more important pages. They're all important, but this is especially important. A lot of folks have trouble tracking business expenses, so we've put together a page called Tax Deductions for Rideshare drivers. We purposely called it Tax Deductions because that term is just a little bit more accessible than business expenses, but this covers a lot of the information that you all have been asking about. So how to track these expenses, what expenses can be tracked, and then the difference between standard and actual, standard mileage and actual car expenses. We also have many fun graphics that make it a little bit easier to understand. Just to break it down a little bit further, we've put together a page on the standard mileage deduction, standard mileage as well, just because we know that folks have trouble with this one. All right. Okay, so I also wanted to highlight the page that we have on quarterly estimated payments. I know a lot of folks have trouble understanding what to pay and how to pay. So the first page that we have covers how to pay these expenses and when to pay them. We also are very excited about the estimated payments calculator tool that we've created. There's two versions of it. There's the simplified calculator and the more advanced one. The simplified one, all you have to do is put in your filing status and your income, and it'll tell you how much you should pay in estimated payments. You can easily go to the more advanced one that'll take you through a series of 8 questions, and that'll spit out a number for how much to pay as well. So in addition to all of these web pages breaking down the topics that people have trouble with, we also have a bunch of resources that you can use. The first resource that I wanted to point out is the Roadmap to Rideshare Taxes Business Card. So I know a lot of folks at the site, you can't really give enough information, but we've created a small, a regular business card that you can either have printed or print out yourself. If you download the PDF is already ready to print. It has margins on the side, so you can upload it directly to one of the websites and have it printed that way from a printer. You can also download the publisher file and print them out yourself. The PDF that's available online is Illustrator compatible, so if you have Illustrator, you can go ahead and edit this card yourself, add your logo, whatever. And if you don't have Illustrator or need any help with that, you can shoot us an email and we can help make you a customized business card for your site. Another item that we are very proud of is the cheat sheet that we created. The cheat sheet covers all of these topics in a one-pager. It's one page back and forth that has everything folks need to know. So on the front, it covers business expenses, paying estimated taxes, and then how to file taxes, and what to bring to the tax site. And then on the back of the page, it covers expenses. So it kind of goes over every single expense that folks might take. And then finally, we have a tax organizer that we've created. So for folks, so this is really for folks who do appointments. So if you know someone is going to come in with rideshare income, then you can have them fill out this organizer beforehand. huge shout out to Tom Larson from Prepare and Prosper, who created the original tax organizer for self-employed workers for their self-employment program. We basically just copied theirs and adapted it for rideshare drivers. So just scrolling down so y'all can have a look at it. And this will make sure that folks bring in everything that they need and are prepared for the session. And then finally, we've been also putting together a outreach toolkit with help from our awesome intern, Audrey. So we have in the toolkit so far sample Facebook posts and sample tweets. We also have some graphics for the estimated calculator. So this is a work in progress. We will be adding graphics to this folder with time. So if you all have ideas for what would be helpful in your outreach, please do let us know, and we can figure out if it would make sense for us to create it. All right, so as you can see here, all of the links for the pages that I've showed you all are in the PowerPoint. So yeah, you'll be able to access that afterwards. Okay. So with that, I will turn it over to Francesca and Megan of the Cash Campaign of Maryland. Francesca.
Hi, everybody. It's Francesca here with Megan.
Hi.
Megan,
I'm gonna
her video is not showing here, but Megan's our associate for Tax Partnerships. She's next to me, and she's going to be fielding all of the great questions that you guys are sending through the chat box and the Q&A that aren't getting answered in our conversation. We've already had some really great questions, so thank you for those. Just a little bit about us. We are the Cash Campaign of Maryland. The cash in our name stands for Creating Assets, Savings, and Hope, and we're a nonprofit organization that promotes economic advancement for low to moderate income folks in Baltimore and across Maryland. Okay, here we go. Awesome. As Jenny said, we took some time to go through all the wonderful questions that you guys sent in. So thank you to all of you folks that took the time to answer the questions. We had a lot of fun reading through them. And so what we noticed was that a lot of folks had questions about expenses. And as Jenny said before, we did do this webinar last year where we did provide a lot of comprehensive information around income, expenses, substantiating documentation, as well as record keeping. So definitely, if you're just starting out and still have some questions, take the time to review that webinar and those slides. They still live on the website. Center on Budget is always wonderful to have and make those things available and keep them up there, host them for years on end. So definitely take a look at that. But we are going to take some time today to talk a little bit more about expenses. When you're talking to folks about business deductions and expenses, the bright line and the glowing yardstick that we always want to use is ordinary and necessary. And these are terms of art for the IRS. They're defined as ordinary is expenses that are common and accepted in a taxpayer's line of work. And then necessary are expenses that are going to be helpful and appropriate for the particular trade or business. So obviously when we're talking about an Uber or Lyft or other rideshare app driver, most of the expenses are of course going to have to do with their car. And we're going to delve into that a little bit later. But one thing that it is important to note is that we have some restrictions as VITA programs about the kinds of tax returns that we can do for folks around Schedule Cs. And so the limit for business deductions is $25,000. And so one of the wonderful questions that we just got that Megan wrote down is does this exclude drivers with more than 43,000 miles in 2019? And the answer is, the actual number is 43,103 miles. So if someone is over 43,103 miles, that's going to put them at $25,000 in business expenses, and they are going to be out of scope for us. So great question. Thank you so much for bringing that to us. It made me furiously calculate that in my brain. So the number for mileage that you want to think about is 43,103. Okay. moving on to the standard mileage deduction. So this is going to be the biggest expense that most rideshare drivers are going to have. It's also going to be one of the easiest for them to track. You know, every year the IRS sets the standard mileage deduction. So for 2019, it's 58 cents per mile. And this is something that clients need to pay attention to because the IRS sets it every year. So it can change. So last year, if you remember in 2018, that number was 53.5, so we got a little gift from the IRS in the form of 4.5 cents to bring that number up to 58 cents per mile. So folks want to pay attention to that because it does change. So in 2020, it very likely could be up or could be higher or lower than 58 cents. And then the standard mileage rate is really designed to take into account, it's supposed to be the easier route, right? So it's supposed to take into account all of the things that happen with a car. So that's going to be your gas, your depreciation, your oil changes, your repairs, all of that good stuff, including your car washes. And I know there was a lot of contention around car washes last year. So here's the thing, the IRS put out, SPEC actually put out a notice last year that car washes are not included because somehow mistakenly in the training materials, they had said that car washes were able to be included on top of the standard mileage deduction. So last year they came out with a volunteer tax alert that said that car washes are not allowed to be included on top of the standard mileage rate. If you are taking the regular, actual car and truck expenses, you are able to take into account your car washes. But for standard mileage deduction, that is technically included in the 58 cents. Now, I know this answer doesn't please everybody, right? Because I've definitely had this conversation with lots of tax nerds like myself who will say, well, because they're in the business of driving, they are getting their car washed at a more at a faster rate than most other people would, and they have to keep up the car in a certain standard. I hear what you're saying. I totally get it, but you know what? We got to err on the side of conservative. We got to be a little conservative with our clients. If you are part of an LITC clinic, or you have your CPA certification, and you're able to fight that out when it comes to it, if the client does get a question about that, then definitely do that. But for the rest of us, let's just keep it conservative. We're going to keep car washes out of the standard mileage deduction, okay? So that 58 cents, that really includes pretty much everything that has to do with the car except for tolls, parking, and then business percentage of auto loan interest. So this takes into account that folks might have a car that they're using for both personal and business work. So basically, they have to figure out what percentage of the car is for business, what percentage is for personal, and then they're only able to use the percentage that is available for the business of their auto loan interest. And the same thing for personal property taxes. If the driver is in a state where they have to pay personal property taxes, that is based on the value of the car. It's only the business percentage of that amount that is going to be able to be added on top of the standard mileage deduction. Okay, so we have a cool infographic. I know a lot of folks want to know what are some resources that they can give to folks before tax season, and this is a great one. It is a really cool infographic that the folks at CBPP put together that has the vehicle expenses mileage deduction, and it shows option 1, standard mileage deduction, and what are the things that you can add, which are, as I said before, tolls and parking, and then the business percentage of auto loan interest and business percentage of personal property taxes. Those last two aren't going to be as common, so we decided not to add more words onto this beautiful infographic than necessary, because it's not going to be often that folks are going to need to take that deduction. Also, if we put it on here, folks probably won't understand what it means, right? So we focused on putting the two that are most common, and then we'll leave it up to all of you folks at the VITA site to explain around business percentage of auto loan interest as well as personal property taxes. Okay. The other option is actual car and truck expenses, and this is where folks will definitely need to hang on to all of their receipts for all of the things that they are putting out that surround their car. So this is where we're going to include car washes, car depreciation, garage rent, gas, lease payments, licenses, oil changes, parking and registration fees, any vehicle repairs, tires, tolls, roadside assistance, auto loan interest, all of that good stuff. And I just want to direct you guys to the little red no VITA zone little graphic that I try to enter here. Unfortunately, actual car and truck expenses are out of scope for VITA. One of the reasons is that it can get really, really complicated. Trying to reconstruct records is, part of that complication, but also, depreciation, all of that, those are a little bit more advanced topics and a little bit harder to teach to volunteers. I know that when we were creating the website, we wanted to put information about depreciation on there because, it's for end users, and we wanted to put as much information as possible on there, but we only wanted a paragraph. And so I was like, Jenny, I can't explain depreciation in a paragraph. That's just not going to work. So we decided to put very little information about that on there, just because, folks that have depreciation, I'm not saying that it can't be figured out and it can't be done, just can't be done by VITA sites. And if folks are thinking about car depreciation and taking actual car and truck expenses, which in a lot of instances can be more valuable, so let's not discount that fact, especially if folks have, a more expensive vehicle that they're paying higher lease payments on, or they had a lot of repairs, but they probably want to see a tax professional if they're going to be using actual car and truck expenses. They definitely need a little bit more of a more sophisticated record-keeping system, because you're going to need all of those receipts in order to accurately arrive at that number. Yeah, will car washes be overruled? Sorry, I don't know what I don't know if that's going to happen. It could be. Like I said, there is definitely an argument for car washes to be included for these folks because, again, they do go to the car wash more often, right? Because they've got to have a clean car. Nobody wants to get into a gross Uber, but for right now, this is what we've got. So until we hear otherwise, that's what we've got to think about and say about car washes. So here's the other part of that wonderful infographic that shows actual car and truck expenses. It shows some of the major expenses that folks will need to keep track of. So again, if you're thinking about resources to be giving out to folks right now, this is a great one. Like I said, anything to do with their car is going to be their biggest expense. So if you're wanting to be talking to folks about it now, giving them a piece of paper or some information, this is a great infographic to share with folks. So we got a question about auto insurance. So again, the standard mileage rate takes into account all of that good stuff, all of that auto insurance. Unless you live in a state where that requires you to purchase separate insurance for rideshare, which there are a lot that are doing that. I know California, I think New York, that require that you have additional insurance. If it's not part of that additional insurance, it's going to be rolled into the standard mileage rate and won't be additionally deductible. But if you have to purchase some additional auto insurance to be a rideshare driver, then that is something that you are able to deduct. And then that would just be part of actual car and truck expenses. Okay, and I'm going to jump to this infographic, which is which miles count. Actually, nope, I got ahead of myself. So this is other deductible mileage. So a lot of folks had questions about what miles count. So obviously, miles when you have when you have a passenger in the car, when you're on a ride, those are definitely going to count because you are driving. And then both Uber and Lyft track, and I'm sure other rideshare services also track your in and out of ride miles. So you're always going to have those in ride miles. But there is other additional deductible mileage. And so miles driven to pick up passengers, miles driven returning from a drop-off point to a place to wait for another ride. So I know that there are a lot of folks a lot of drivers like to position themselves by airports or by, metro and train stations. So if they go drop off a passenger at one ride and then they drive to like the Amtrak station, that's definitely deductible mileage. And then any other mileage that's related to the business. So this is where things can get a little squirrely because it's like, oh, every time I'm in my vehicle, is that deductible mileage? Well, no, that's where we have to bring back the lesson about the three different kinds of miles, right? There's commuting miles, there's business miles, and there are personal miles, and only one of them is deductible. So business miles are the only ones that are deductible. We've had a lot of conversations with folks about, well, what if, because Uber and Lyft drivers, these rideshare drivers don't necessarily have an office, right? So and it used to be the old adage that if the trip, the beginning or the end of the trip was your home, then that is going to be considered commuting miles, and those are not deductible miles. So that's a little bit harder to do when, you have a place, when you're in a profession that doesn't have a particular office location. So what I always say is, take a trip. Most drivers turn their app on as soon as they get in their car, and so they're usually on the way to a ride. And if that doesn't happen, I always say, go get gas, or go to the store to get water for your passengers, and that's going to be considered the start of your ride. So the important thing to note is that it's not just drive miles that while you have a passenger. There are a bunch of other miles that can be counted that these folks just need to keep track of. And so again, I just want to talk about mileage logs. The IRS does want drivers to have records. Record keeping is very, very important for folks that use the Schedule C and CEZ, Uber and other rideshare drivers notwithstanding. They also need to have their mileage logs. So that's going to need to have the date, the destination to and from, and what they were doing there. They're going to need to have some of that information. The apps are going to give them a pretty good starting point, but especially when we're talking about other miles that are outside of app miles, folks need to be jotting down all of that information and keeping it handy so that they have some records and some proof when it comes to tax time. Yes, roadside assistance plans like AAA are included in the standard deduction. Thanks, Suti. Unless you have to purchase an additional roadside assistance plan specifically for your rideshare driving business, that's going to be included in your standard your standard mileage rate. All right, so we got a lot of questions about delivery services like Grubhub. Yes, these things are going to apply for those particular folks. They are using their vehicle, and so it's similar to rideshare in a sense, but it is like a different, because it's delivery as opposed to ferrying passengers from point A to point B. But the conversation is still the same. These business deductions are still going to be the same around your standard mileage rate and your actual car and truck expenses. But the miles that count are going to be a little bit different, but definitely the standard mileage rate and actual car and truck expenses do apply to these food service delivery folks. All right, so again, this is a great infographic that shows what miles count. A lot of folks are visual learners. You can say something to them until you're blue in the face, but they need something visual to, figure it out. And so we've got something visual, something tangible too. So people that are tactile, that like to touch stuff, I'm one of those people. I'm the kind of person that goes into a store and touches, coats of different textures because I like that. This is a great infographic for folks. It shows that passenger miles. Oops. Oh, am I getting you?
That was
that was definitely you. So this shows that any miles driven with a passenger in the car or on the way to pick up a passenger, so between trips, is going to be deductible, and any miles driven in aid to your driving business. So if you are driving to the store, a lot of rideshare drivers like to keep water and candy and chips and snacks. Those are my favorite kinds of drivers. Driving to the Costco to get some of that stuff is definitely going to be deductible. But of course, you got to keep track of it. What miles don't count? So personal miles, again, any driving you do for personal reasons cannot be counted under business miles. So if you turn off your app to go to grab lunch during the day, that is not going to be mileage that you're going to be able to deduct. The same thing with commuting miles. Again, I explained to you that there is a little bit of some gray area because now we have a lot more folks that work from home. So whether or not, if your last trip is on the way home, is that going to be commuting miles? Again, I just say err on the side of caution. When you're leaving your house for the day, let folks know that they should you know, make a quick stop at the gas station or to the store or the corner store down the road from their house, just to make sure that those are always going to be miles that can be counted and not discounted as commuting miles. Yeah, how do you deal with clients who say I could easily recreate the logs? Giovanna, that's a really great question. I'm always scared of these people. But you know what? A lot of our clients just don't necessarily get the education that is necessary. And what I do is really, I don't want to say scare because I don't use scare tactics. This is always a positive environment. But I want to say it's definitely important to say that you want to make sure that you're counting all the mileage that you should, or that you actually have. So, you know.
Francesca, you're cutting out.
Now.
Okay, yes, we can hear you.
Okay, perfect. So what was the last thing that I said? Because there was a lot in there.
I think you should start over with the response.
Okay, yeah, let's just do that. All right, so this is a question from Giovanna that says, how do you deal with clients who say I could easily recreate the logs? And I said, these clients often scare me. But what
yes, we heard your example.
Oh, okay. So, you know, you just want to let folks know that the way that folks can get in trouble with the IRS is by overstating expenses and understating income. And so you want to impress upon them that you really need to be as sure as possible and be as conservative as possible, especially if you don't have records to begin with. You just don't want to get on the IRS's radar. You don't, you know, we all want to be not in contact with the IRS in an audit situation, and we already know that Schedule Cs kind of get that scrutiny, that second look, because there's the, you know, tax gap and the idea that Schedule C small businesses are the reason behind why the IRS collects way less money than it should and is entitled to. So I just, you know, very strongly, whenever someone says that to me, you know, caution them with saying things like, if you don't have any records, let's be really, really conservative this year. If you say that you can recreate these, why don't we just take a little bit less this year and talk about how we can start a record-keeping system for next year so that we can start out right and make sure that we have all the records that are necessary. And, you know, that's kind of my advice on that. Okay. All right, so which miles count? We did that already. Okay, so other deductions. So like I said, the most important and the biggest deductions that folks are going to have when they're rideshare drivers is going to be around their car. But there are a bunch of other deductions that folks can take advantage of. And this is, you know, this is part of that education piece. You can definitely let folks know that there are other things that they can do. So like the cost of a phone, right? They have a phone that they use to either text or contact their clients, or sorry, their rides. I know that we used to work at a building that never showed up on the map ever. They always would think I was 2 blocks down the street for some reason, and so I would often call and text them. The cost of a phone service plan, repairs for other things that are not your vehicle, because we know that car repairs are part of car and truck expenses, or part of actual car and truck expenses. But let's say you needed, you know, your phone got smashed, or your phone holder in your vehicle got smashed and you went to repair it, you know, those kinds of repairs. Accessories such as chargers, cables, and mounts, snacks and refreshments for passengers. As I said, those are my favorite kinds of Uber and Lyft drivers that have snacks and candy for me. If you have an electronic toll transponder, you know, floor mats, there are a lot of, or seat coverings. There are a lot of folks that will, you know, have a seat covering over their, you know, maybe they have nice leather interior, something like that, and they buy these covers so that they can protect that. Any office supplies that they might use, you know, if they buy calendars or notepads to jot down expenses, things like that, you know, pens, paper, all of that good stuff. Dash cams, if you have a dash cam that you want to purchase to keep everyone safe, that is becoming, that's an increasing trend with rideshare drivers, so dash cams. If you have a car tool kit, a first aid kit, tire inflator and pressure gauge, a portable battery jump pack, flashlights, and flares. If you have to pay any specific business taxes or specific licenses to be a rideshare driver that are separate than your normal, driver's licensing and registration. If you have additional non-auto insurance plans, so personal liability coverage, some of that other stuff. These road assistance plans, again, that are over and above what you would get personally. Music apps, a lot of folks like to have some jams. There's the Party Ubers, Party Lyfts. Those are also my favorite, where you you've got music going, or you try and provide some good jams and tunes for your passengers. Also, increasingly, there are background checks, so fees for background checks. Those are also things that can be deducted. And, just so you know, what the asterisk says is that these may be allocable if not just for business use. So that means you got to figure out what is the percentage that you use each thing if you use it outside of business purposes. So you have to figure out what's the difference between your personal and your business use, and it's only the use that is for business that you can deduct. So, for example, the cost of a phone. If you purchase a new phone and you use it for anything other than business, you have to figure out what is the percentage that you're using it for business, what is the percentage that you're using it for personal use, and then only the business portion is deductible. Same thing with the phone service plan, and a bunch of these other deductions. So that's why that asterisk is there. Okay, and a great question we just got is, are these other deductions under actual expenses? And that's a no. So you can take these other expenses in addition to your standard mileage rate. These do not have to do with the standard mileage rate. These are other expenses that are over and above the standard mileage rate. So you don't need to use actual expenses, actual car and truck expenses in order to take these deductions. So that was a great question. Thank you. So again, as folks are asking for things that they can give their clients, this is a great infographic that shows these operating expenses, again, as a visual. It's a great resource. It shows folks, what other expense deductions that they are able to take over and above the standard deduction. So, mileage tracking software. So if you buy any of the eye tracking software, so Mile IQ, that's what I was thinking of. And you have a monthly subscription. That's a great one that's a great deduction that folks can take that people often don't think of. Another really, really big one is Uber and Lyft fees and commissions. All right, so deductible expenses. So unfortunately, everybody's got to get paid out of this business, right? So Uber and Lyft got to get their cut. So there are some expenses and fees to the drivers in order to be part of the Uber Lyft platform. And so these are things like Lyft commissions, express pay fees, tolls during a trip, rental fees, and parking. These are all things that come out of the driver's cut. And so you'll notice all of these will be on the 1099K if folks get one. If not, this will be available on the Uber and Lyft statements. Same thing for Uber, Uber commission fees, if there's a Uber-provided device subscription, if there are black fund fees, city fees, airport fees, split fare fees, safe fare fees, lots of fees, folks. All these fees are going to be deductible, and they can be found in the drivers, usually in the app, and it'll be found on their Uber and Lyft summary statement. And if you are interested in knowing what those look like, then I'm going to tell you to go back to the webinar that we hosted last year that has all of those things that will show you the Uber and Lyft account summaries. I will give the caveat that those are last year's summaries. So if there are any updates to all of that stuff, we haven't gotten our hands on it yet, but we are going to be working on that. It's part of our secret spy missions. So we will be updating that as we get access to them. But as you know, we're not just in tax season yet, so we don't know what those account summaries are going to look like just yet. Okay. want to make sure I didn't skip through anything here. Okay, what expenses are deductible? So again, this cheat sheet is really great, especially as, again, you folks are asking for resources to be giving these drivers, before tax season. If you're seeing them now, if you have connections with your local Uber and Lyft or other rideshare, businesses, a lot of times they'll have these hubs for drivers, or you are coming across them in some other vein before tax season. This cheat sheet is really great. It has all of the tax deductions, well, not all, but a very large portion of the tax deductions that folks can take. It lists out the vehicle expenses as well as the operation expenses, and it's created as a checklist, so folks can check on all of that stuff. Again, it also tells them what miles count, apps and tools that they can look at, and how to track. So that's a really good, resource to share with folks. So we've got a couple of questions around this mileage log. So if drivers don't have mileage logs, the annual report from Lyft and Uber will show miles. Should we use this number instead? If this is all a driver has for right now, then you can definitely use it. Again, you want to impress upon these drivers that these statements don't show all of the miles that they could be deducting, right? So the name of the game is to make your income as small as possible, because we want to make sure that the tax liability, the self-employment tax that they'll have to pay, is as small as it can be. And so, yes, you can use these annual reports, but it's definitely going to be shortchanging them a little bit. It behooves them to have their own mileage logs to keep track of that stuff. And like I said, it's a great starting point, but it's not all the miles that folks can use to deduct. How do you explain IRS's definition for keeping a contemporaneous mileage log to the taxpayer? Well, you're not going to use those words. Again, Eric K., thanks for that great question. Again, it's going to be talking to folks and impressing upon them that Uber and Lyft and all of these rideshare annual statements are just a starting point. There are other miles that they might be able to take advantage of that the apps are not keeping track of. And the only way that you're going to know is by keeping your own mileage log. And so, again, I would stress it to them you're leaving money on the table. You are, by not counting all of the mileage that you could definitely deduct, you're increasing your tax liability and you're paying the IRS more taxes than you might have to. And so that usually, when people see, it's kind of like this behavioral econ, terminology, when folks see that they're leaving a little bit on the table, it's like, oh, okay, I might have to invest some time into that, because, it's my money that I'm going to have to pay to the IRS if I don't take, more responsibility over keeping track of my own mileage. Okay. Separating business and personal calls, are phone logs needed? Well, I will say it never hurts. The more records you have, the better chance, with making sure that all of these expenses are kept and, documented. So, as I always say with my clients, when they want to give me a number and don't, have anything, I'm like, well, we really, really need your records. The standard by the IRS is that should they come and ask you for you to substantiate any of these records, they need to be available. So you need to make them available. So you want to make sure that you have this stuff. If you're going to be using both a business and the same phone for both business and personal, it behooves you to have those records and make sure that you separate those. And we're living in this great age where there's the cloud, right? So you don't have to keep track of all of this paper. You can definitely have all of that stuff just ready in the cloud, or scanned, or however it works. You don't have to have all of these pieces of paper keeping everywhere. You can definitely have these logs, but utilize more technology. So we have a question: do you know what specifically mileage is reported on 1099s? So Mileage is not reported on any of the 1099s. So if, again, if you guys have questions about this stuff, you should definitely check out the webinar we did last year. But there's two forms that the drivers may get, potentially, because it has to do with what Uber and Lyft decide their reporting is, which is kind of crazy, but that's it's a little bit of the wild, wild west when it comes to that. So a driver will get a 1099 miscellaneous with information in box 7, and that has to do with any payments that come directly from the rideshare companies, so like bonuses or referrals or things like that are going to be on the 1099 miscellaneous. And then on the 1099Ks, that's where all the income that has to do with driving is going to be reported. And then 1099Ks are just not the best form. They really aren't, because in all of that income, in those income boxes, you basically get a total of all of the third-party payments, which doesn't necessarily mean that that's exactly what the rideshare driver received, but it's basically the payment that came from the passenger to the driver. And so a lot of times, so that's going to include all the fees and all of those things. So, it'll show like $1,000 came to the driver, but in reality, because of all of the fees, the only thing that the driver actually got was $700 because there were $300 in fees. So that's why it's super important to have the Uber and Lyft and other rideshare driver summaries, especially if the taxpayer doesn't have their own records, because that's going to show the distinguishing pieces from what is on the 1099K, because the 1099Ks only report the total payments. And we know that Uber and Lyft have decided that they're only going to issue 1099Ks if drivers hit 20,000 transactions, or if they earn over 20,000, if they have over 200 transactions, or they earn over $20,000. So you got to be careful, because a lot of times folks won't even get these forms, so you're going to need those summaries. Are meals included? Okay. We got this question a couple of times. So meals are not included because, business expenses, again, remember the yardstick is ordinary and necessary. And that means these are things that are necessary to the business and appropriate for the business. So if you're a driver, it doesn't necessarily follow that you eating lunch or dinner is going to be, income generating. That's what these expenses are. It's basically you kind of giving back to the driver all the money that they are putting out, or compensating them for everything that they're putting out in order to get more income. So meals are definitely not included. So if someone has purchased a Subway sandwich every day for 365 days while they're on lunch, if they're driving 8 hours a day, that is not going to be an includable expense or deductible expense. So clients are confused and they think written documentation is the same as what's in their heads. Yeah, we get that a lot. The best practice that I can think of is you have to start educating clients early, right? If you are getting access to any of the folks that are coming through your door, you've got to start letting them know that we need actual tangible records, things that we can see, things that we can touch, because when, if for some reason, the big A comes along, audit, you can't show the IRS what's in your brain. They're going to want to see actual records. So we definitely want to be educating clients as early as possible, right? But that only works with a certain set, right? You never know who's going to come through the door. So you have to explain to them, if anything were to happen, you would need to show the IRS physical records. You can't just tell them, oh, I remember. They want actual records, just like any other kind of audit that they might have to go through with the IRS. You have to show them something. You have to give them some physical, tactile records. Okay. More info on where to enter this in TaxSlayer. Yeah, definitely check out the webinar that we did last year. We went over some of this, but I will say that there is some information in the 4012 about this. I'm thinking, let me think more about that. But we definitely did talk some about this last year in the webinar that we did. I don't know how in-depth we went into it because we talked more about the forms And we didn't go as deep into like the Taxpayer entry only because not everybody uses Taxpayer. But let me think about this for a minute. Okay, if the driver works for both Uber and Lyft, ooh, that is a lot of folks. Are the two apps double counting by tracking same miles on the app? Catherine, great question. Yeah, the answer is yeah. You have to be really, really careful about that, especially if you have both of them on at the same time. Obviously, only one of them, when the taxpayer has a passenger, only one of them is going to be counting the ride. But yeah, when they have both miles, when they have both apps on, the possibility of double counting is very, very possible, and it's real and not good. So again, this is just another point to stress why folks need to be keeping track of their own mileage. They need to have their own mileage logs. Okay. Alrighty, so let's see. What about favor runners? Yeah, so, I think we need, so delivery service. You know, it's going to be the same kind of situation with, like I said before, with delivery service. You know, the standard mileage rate and actual car and truck expenses, that matters no matter what business you're in, whether it's rideshare or not. Those are standard practices. But what really is going to turn the tide, what really folks will have to pay attention to is where they're actually going, like what they're counting the business, what are the actual business miles that they're going to need to be counting. So again, it makes sense that business miles for these folks is going to be picking up and then delivery. Those are definitely non-questionable delivery miles. But, you know, again, that can get a little hazy depending on where the driver is for, you know, at the starting point. But again, actual car and truck expenses, standard mileage rate, those are general concepts across all Schedule C businesses. So the same kind of rules are definitely going to apply. All right. So let's see. So we have questions about Uber's net payout section, which includes reimbursement. Again, you got to go back to the other webinar that we did. We went over the reimbursements and we went over you know, kind of line by line what each of these things entails and how they should be treated in the tax return. So definitely go back and check that out because we have definitely covered that in depth. And you know, it is confusing to both tax preparers and taxpayers, and that's kind of why we why we did that webinar from last year, so that we could get more in depth on that. Okay. That's it. All right. All right. So any other questions where we, yeah, so Catherine, favor, the same thing is going to apply around the delivery service. Oh, wait a minute. The link to last year's webinar, I think we can do that. Jenny, Roxy, if we can send the link. So, okay. Okay, yes, so Catherine, so we don't have favor here, so that's interesting. So favor is a unique service in which the runner actually pays for delivery. Yes, that is going to be considered cost of goods sold and should be out of scope for VITA because you are going to be the person who's doing the delivery actually pays for it. So my understanding is how you have read it. Again, we don't have that here, so I haven't come across any of that. Those haven't been any of our clients. But, you know, that's really interesting. Like, again, as I said, cost of goods sold does come to mind, and that makes me think that that's going to be out of scope for VITA, but I am going to write that down somewhere and going to, you know, look into that a little bit more. All right, so we have just 2 more minutes. Oh, thanks, Eric K. Thank you. And so if we have any more last-minute questions, just again, you know, the resources that we have on the web page are really, really great. We spent a lot of time trying to think about the language that we should use on these materials to really make sure that we could get the point across to folks. So if you guys have any feedback or any insight on any of the stuff, definitely let us know. We are actually in the middle of trying to do some testing around these materials to make sure that this stuff is still as awesome as we think it is. I can't stress enough how amazing the calculators are. The simple and more advanced calculator tools are wonderful. I teach a lot of small business classes with folks that are, not just Uber and Lyft drivers, but, other folks that are small businesses and entrepreneurs, and I always break it out with them, and they, really like how easy to use it is, especially the simple calculator. I mean, you can get there in 3 steps. The advanced calculator definitely gives you a lot more information, helps you figure out what you need to do, so I can't stress enough how wonderful those tools are. I definitely had nothing to do with, the design or implementation of that because I just cannot. But the wonderful folks at Center on Budget, I told them what it needed to say, and they made it happen. So again, if you see a lot of small business clients and you want to be talking to them about quarterly estimated tax payments to really help kind of soften that blow around self-employment taxes, that online calculator is really, really great. So last question. Yes, so Sue asked on your list it shows roadside assistance as a separate deduction, but answered that AAA was part of the standard deduction. Can I clarify? Yes. So all of that stuff is going to be part of your standard deduction, but if you purchase some additional roadside assistance, anything over and above what you would normally get as your normal AAA, so there are a bunch of packages that AAA, for example, offers, and of course, AAA is just an example. So, there's regular, then there's gold and platinum, and that decides whether or not you get a 20-mile tow or a 100-mile tow. And so for yourself, you would buy the 20-mile tow, but you upgrade it to the gold package. The difference between those things, that's something that could be deductible. Again, if you are in a state or if you have purchased additional, roadside assistance that's just for the business, that's something that is additional and can be added on top of your regular standard mileage rate. So I hope that answers your question, Sue. Oh, awesome. Thank you. So qualified business income deduction, QBID, thanks, Delvin. Right at the top of the hour at the end. So we didn't talk about that, especially not last year because, when we did it, the final rules hadn't come out as they hadn't come out until March. So, yeah, we didn't include any of that. But, yeah, I'm not going to say too much about that. We are at the top of the hour, but I will say that, some of our clients can get it. The software last year, if you used TaxPlayer, after the final regulations were already implemented, did a really good job of calculating that for folks. Prior to the final regulations coming out, there was a little bit of snafu about that being calculated, because a lot of folks tend to think that the QBID has to do with your Schedule C, and it doesn't. It's actually a deduction on your 1040. So all that is to say is, QBID, it's there. Some of our clients do happen to get it. If you're using TaxPlayer, it usually does it for you, and you don't really have to worry about it. But it's good to talk to your clients about it and let them know that it is there and available for them. All right, that's all we have.
The deduction is also part of the calculations for the estimated payments calculator that we have.
Yes, thanks, Jenny.
Awesome. Francesca, you're amazing as always. Thanks for flying through all that content and all those questions. Thanks, everyone, for all of your great questions and for sticking with it. I know it's a pretty intense topic, and we have some great tax nerds to help explain it. So thanks again, Francesca and Megan. Yes, and as always, we will have the recording and notes and slides available, so you will be able to access everything. And the PowerPoint has links to all of the tools that we talked about. So yeah, definitely check out everything that we've put together. We're very proud, as Francesca said, of all the work we've put in. And one more thing before you all go, we are very, very open to feedback and making new tools. this fall, we're putting together some blogs on rideshare taxes. So if there is a topic that y'all think would be helpful for us to talk about that you could share with your clients, let us know. If there's any graphics that we can make, just let us know what would be helpful for you. We're always looking for feedback. So
absolutely.
Awesome. Yeah. Yeah, for real. Okay. Well, on that note, yes, hashtag Nerds Unite, indeed.
Absolutely. Thanks,
Exactly.
everyone. Have a good afternoon.
Yeah, thanks. Bye.
Bye.